I don't think that the data privacy concerns are going to kill digital advertising. I think they're going to evolve digital advertising.
Hey Stockcardians, welcome back to the show. It's that time of the month that we have our special guest from 7 Investing in the studio, or actually in his studio, and I'm in my own studio recording today's episode. Simon Erickson, founder and CEO of 7investing.com is here. Simon, say hi to everybody and we'll jump into today's episode.
Hoda, it's always a pleasure to be here. I'm glad to be here in my studio in Houston, but I'd be glad to send you a 7 Investing marquee to your studio in California if you'd ever like it.
We should do that. Maybe we should swap a stock card, neon sign behind you.
You got it. Count me in.
Awesome. So today we're talking about digital advertising. Simon, you and I talked about it last time when we wrapped up the previous episode. And we just in the past months or so, we launched this digital advertising collection or theme on a stock card, which is a full research we do about the drivers of growth in this industry and different subsegments of this industry, which a lot of our actually Stockcardians have received a copy of that in the last email, sort of this week at a stock card email. Some users might have seen it, but I'm very excited to have this conversation with you because you're coming at it from a very specific point of view about one of the subsegments of digital advertising. So we're going to dig deep into it, but let's just first define when we talk about digital advertising, what are we even talking about? What do you define as digital advertising, Simon?
Yeah, advertising is going over the internet, right? And that's transitioned over several years and decades, as we all know. It's not just all desktop computers anymore. There was kind of this mobile ad revolution where you're going through apps, which is very different from just going onto a website through a website navigator. And then, of course, we've got even some new ways that advertising is being delivered these days too, right? Podcasts is a really big thing. Everybody's got Spotify. Everyone's got a direct relationship with streaming. And I think that the biggest one of all is going to be over the top, which we've seen coming for years and is finally here. Connected TV is the most lucrative ad rates of all of digital advertising. So it's kind of a big field. There's different silos or buckets you can look at. But for investors, it's fascinating because this is an innovative field, moves very quickly, a lot of opportunities for big companies and small ones alike.
Yeah, that's true. And I've seen there's two school of thoughts about it. One is people who are worried about sort of like people moving away from free stuff and sort of things around privacy concern. We've seen so many ad blocking apps coming up, privacy concern issues by regulators out there. So there's that one school of thought that actually digital advertising has a lot of challenges in order to grow as an industry. And then on the positive side, I saw research done by ARK Invest recently, and they were talking about the discretionary amount of time we spend online is rapidly growing from 20% of our time before the COVID-19 pandemic era, all the way to half of our time expected to be spent online on digital channel. And when there is eyeballs there and when there is attention there will be advertising dollar. So what is your point of view in this one driver that is gonna grow, and then this whole notion of concerns around whether actually digital advertising can survive considering all this regulatory issues and concerns around privacy? Where do you land on these two school of thoughts?
They're both true. There's definitely going to be more time spent online. There's definitely going to be more opportunity for advertising. But to your point, Hoda, I don't think that the data privacy concerns are going to kill digital advertising. I think they're going to evolve digital advertising. We've kind of seen this for several years. We've seen that people have a growing distaste for the company formerly known as Facebook, now Meta Platforms, of just, it was behind the scenes. They were taking all this data, they were using it for their own purposes. You don't know what you were getting yourself into. And between that and kind of the regulations that took place in Europe, consumers now want to be able to know how their information is being used, and even better, opt in to allow websites to understand. That's been the third-party cookie, which we followed for a long time, but even that is starting to evolve even today. The first step took place last year, right? We saw Apple with its iOS 14.5 update, where now the device identifier, so the iPhone that you were using, was allowing you to opt in to personalize advertisements on certain applications or on certain sites. And this is a big deal, right? Because most people, or a lot of people, were saying, hey, I'm fed up with these ads. I don't want them anymore. And kind of industry-wide data that we've seen from that took place last year was there was still about 20% of an overall consolidated average of people were willing to opt in to still see advertisements, which is interesting, right? Because the ad blocker pluses of the world, we always kind of had this growing distaste for ads anyway, but advertising as a whole is still not inherently bad. It's just that you don't like those pesky ads that have nothing to do with what you want. If I was getting advertisements from Stock Card to get a discount on your service and I love it anyway, that's a great advertisement for me. That'd be something that I would want to see. So the evolving part of this is advertisers are going to have to get smarter about placing the right ads for the right people on the right sites. And publishers are going to need to offer something to embrace the people that are coming to their websites to want to see those personalized ads. If you can figure that out and get the 20% or higher of the people that want to see those ads happy with seeing them, you're able to support higher pricing. The industry evolves, it flushes out the stuff and the crap that we don't want to see and keeps the good parts that we actually do.
Yeah, that's a really good point. And so it's not, to your point, it's not going anywhere. It's actually getting evolved and getting more accurate and more even impactful. I mean, they're forced to be, right? Because regulators won't allow it, and users and consumers, we don't want that like free flow of, oh yeah, you monetize my data as much as you want and don't give me anything in return. So that is evolving, which brings me to sort of these sub-segments of the digital advertising market. We've seen companies who are building software for improving this world of evolving how digital advertising has been done. We've seen a lot of companies that use digital advertising as their business model. And then we've seen agencies that are becoming a lot more smart about finding and allocating digital advertising spots on different channels for the brands. And to what you alluded to early on, we've seen this convergence between TV programming and TV advertising and digital advertising. So maybe we talk about that, because that sounds or seems to be one of the fastest growing segments of digital advertising, known as programmatic advertising. I'd love to learn from you, because I know you've done a lot of work on this. What is this whole programmatic advertising, and how do you see digital advertising or advertising changes on TVs, considering this evolution or the future of ads?
That's a fantastic question. I'll answer this the best I can, Hoda. Starting at the 10,000-foot level, advertising is all about the sales funnel, right? If you can convert at the highest ROI that your ads will allow for you to, that's what you put all of your money into. At first, it was just physical billboards on highways, and the advertisers would only know how many people were driving by the billboard. They had no idea who was actually looking at their ads. And then came the internet, where you could actually get a little bit of, click-through rates and, some other information about where you were placing ads and what people were seeing. Now we're starting to get an even more evolved advertisement, which has got a little bit more intent based around it, right? You can actually know what types of shows people are watching on a connected TV when you're streaming a show on a Roku channel or something like this. And then the reason that Mark Zuckerberg is so excited about the metaverse is there's going to be even more interaction between people that are actually doing things in virtual reality. That is, of course, the advertiser's dream, because they can see what they're doing, what they're interested in, who other people they're interacting with. It's all data. As we're digitizing all of that, you've got a better and better ROI for an advertising spend. And that's the end of the day, what's most important here. Connected TV, the format can be very different than it is for an internet display ad. Internet display ad is typically kind of static. You get a little bit of information about the demographic that's seeing that page, but a program, which you can kind of make some assumptions about the people watching the show, what they're interested in. Is it a sports show? Is it an entertainment show? Whatever else it might be, you can play around with those ads in so many different ways. And the companies that are creating these are calling this branded content. The content creators of the advertisers have more flexibility, so they can start collecting more and more data, improving their ROI, and learning a lot more about their audience. It just kind of one final note on this is it's kind of the same reason that Amazon wants to get into your living room. The reason that Alexa is so popular, I will not say her name or she'll respond to me right now, is because they want to know your purchasing behaviors. And so, of course, Amazon, a large e-commerce platform, intent-based advertising is a holy grail for anyone. That's kind of what everyone's trying to do, and there's different formats that are allowing for that.
Well, yeah, that's very true. So what we're talking about is that even TV is getting advertising and TV is getting smarter because now there is access to a lot more information through digital TV. And something like Roku or some of the platforms like Roku have access to that kind of data, which is quite important for getting it more accurate. So if you want to take it next level, but like there's the channel, there's like a Roku of the world, and then there is other companies like we've talked about it, the Trade Desk, that sort of act as a intermediary between users or brands and the channel. So between Roku and maybe Pepsi, who wants to put an ad on Roku TV. And so can you talk about how does programmatic advertising like type of platform work that is different from what was happening before?
Yeah, it's I always love this analogy that say they're in this giant auditorium ballroom, right? And there's 20,000 people in there, but there is one buyer that's meant to meet with one seller that's out there. And so how do those people kind of connect with each other? They kind of, got to wander around, and maybe eventually after a long time, the right person will meet the right person and they shake hands and they do a deal, an auction. But programmatic is meant to use AI to immediately connect those two people and say, this is the placer of the ad, and this is going to be the person that is placing the ad, the advertiser meeting the publisher, so to speak, and immediately have that happen in a sixth of a second. And so programmatic advertising platforms are meant to facilitate those auctions as quickly and as effectively as they possibly can. So that if you are representing the ad agencies, like the Trade Desk, as you mentioned, would be, they can immediately put their client spend as efficiently as possible to get them the highest return on investment as possible. And then you've also got the supply side of the platform too, the people that are representing the publishers, the sites that are going on out there, the ESPN.coms of the world, the Disney.com, whatever website, whatever app, whatever streaming station you're watching, that can get the highest ad price possible from those, when those two meet at the middle, there's got to be a handshake where it's a win for both parties. They're sometimes in conflict with each other. One's trying to get the highest price as the other's trying to get the highest ROI. But the programmatic industry is all about facilitating those online handshakes as quickly and as efficiently as it possibly can.
That makes a lot of sense. It's almost like, okay, Facebook platform, not the company, has been able to sort of create that finding the best spot for your ads on their own platform. Google, like Alphabet, they've also found a way to do that for their own properties, which is Google search and all that good stuff. But everybody else doesn't have that functionality. So if you want to put your ad on ESPN or put it on Roku's TV programming, nobody had that technology that allows for brands to find the right spot on the publishers. And someone like Trade Desk is the kind of company that allows everybody else, every other ad spot except Facebook and Google properties, they also get access to this like higher matching between the spots and ads, which is quite cool. So let's talk about some of these companies in this programmatic advertising. We already talked about the Trade Desk. That's the one I actually own some shares from a couple of years ago, perhaps. Is that the only one? Is that the leader, or is this like a growing industry? Do you see Google and Facebook of the world enter into this space or not? Like what's happening to that programmatic advertising space?
Trade Desk is a great one, a great CEO, great company, great culture there. They're definitely doing things right. Let me present the other side of that same programmatic ad negotiation, right? Trade Desk is representing in the advertisers. They want to get the best ROI that they can, but they've got to meet up with supply side platforms, which would represent the publishers. And these are the companies like the Magnites of the world, the Pubmatics of the world. They're trying to create a platform that if you are a publisher, you want to get the right ad in front of your audience because data privacy and everything like we talked about before, but also get the highest rate that you possibly can for it. I think they have a lot to win as we're moving away from desktop and away from mobile and moving to connected TV. Hoda, some numbers I pulled a couple of months ago for you here was if you're looking at niche data targeting, right? So this is actually, a little bit about your audience. It's kind of a smaller pool that you're fishing in. A display ad on a desktop site might get $3 per 1,000 views per CPM for something that was displaying on a web page on a desktop. If you're mobile, you might get $6 per 1,000 CPM, or for 1,000 views for niche targeting. Connected TV CPM for this is $100, right? So depending on how you look at it, between what is that, 16 and 33 times greater pricing, because you've got more interactive ads with an audience that's more captive. That's why this is so interesting. And people are starting to move as we're cutting the cord. Everybody's got a streaming station now. We've already talked that Roku has got 60 million US members, and that's more than all of the US cable companies combined right now. I mean, this is a thing. And the publishers are certainly paying attention to this. Now they're starting to figure out how can you attract the right advertisers to their station. So I think that Roku's a winner from this. You had mentioned the Trade Desk. They're definitely a winner from this. I think Magnite and PubMatic, the supply side of this, deserve a lot of investor attention as well. It's an early innings for this. We saw Roku just get slammed. Stock got hammered, but I think that's more of a short-term thing, especially when you kind of consider there was 73 billion streamed hours this last year, and it's growing at 25% year over year. There's no slowdown in the move towards streaming and connected TV.
Well, going back to, we're spending more as society, we're spending more time online on digital channels, and we watch TV even on our desktops, or even if you watch TV on the actual device, but there are digital channels because they're connected to internet and provide that in a digital way. And so regardless of what's happening to the stock price and what people think what's happening next quarter or this quarter and that kind of stuff, the direction is, as a society, we're going to spend more time there. Therefore, advertising dollar is going to follow it. So that sort of gives me a lot of confidence. And things like Roku or the Trade Desk are probably going to be winner at the end of the day. And that's just because that's where society is going to go. There's no stopping to it. Interesting. So I recently saw there's a ETF that is specifically focused on digital advertising, and just pick up these stocks that are focusing on digital advertising as we were doing research for our digital advertising collection. And some of the companies you mentioned, the Trade Desk is there, PubMatic is there, but just the fact that a financial company decided to create a ETF that is solely focused on digital advertising as an investment vehicle tells me that there's something really big happening in this market. That's why people are creating ETFs or specific financial products. And there's enough companies that are focusing on this space that is worth even creating a collection of it that goes into an ETF. So I know at Seven Investing, you each focus on one segment in digital advertising, or one sector. Who is responsible for sort of like this digital advertising or the consumer internet? Is that you, or is it any of the other analysts?
I have put more digital advertising companies on our Seven Investing scorecard than any of our other lead advisors. But I'm certainly not the only one, Hoda. We've got quite a few that have put picks on the Seven Investing scorecard.
Okay, excellent. So you're the right person to ask, what is one stock in the digital advertising space that you would consider as a good buy, and why, compared to everybody else out there?
Yeah, again, I think that there's kind of this, there's going to be this migration away from the walled gardens, right? Like when you're talking about ETFs, and maybe if we're looking at those, it'd be worth taking a look at the constituents and see what the largest companies, percentage-wise, allocation-wise, is in an ETF. Because I do think that the Facebooks of the world have a lot to lose, right? Facebook said that it's, what was it, $10 billion in sales that it's expecting to lose just from Apple's changes last year. Yeah. We just saw that now Android, Google is chatting about in a couple of years limiting cross-app tracking too. The third-party cookie is already phasing out. There's going to have to be a new way of identity. Google is not going to blow holes in its own boat. It still wants to be an advertising company, and wants to be an appealing place for companies to place advertising. But with all of the regulations and all the consumer data privacy concerns out there, those are the companies that have a lot to lose, and they've got to kind of shift their entire business from the walled garden approach that they've taken for so long. I'm really much more interested in the independents. We had mentioned several of them earlier on this program, but I think that this is why connected TV, which isn't quite so entrenched like desktop and mobile is, that has the apps that have already kind of functioned this way for so long. I mean, this is a little bit more of the Wild West. It's still a less than 10% stake of overall digital advertising, but it used to be just you were working with Facebook or you were working with Google or you weren't doing digital advertising 5 years ago. Now you've got more options. There's a more open internet of information that's out there, Hoda. I would encourage investors to maybe go a little bit more risk tolerant in this space, um, especially with, we're coming off of COVID. There wasn't a whole lot of advertising going on and people were staying at home. That's relaxing a little bit right now. We've seen tech stocks just get hammered these last 6 months. So valuations are really kind of, in my opinion, attractive again. This might be a very lucrative space. We mentioned Roku, we mentioned Magnite, we mentioned programmatic. Those are three that I maybe as a starting points are worthy of some more investor attention and research.
Yeah, that's a really good point. And would you move away dollars from, I don't know whether your personal portfolio has like Facebooks and Googles of the world, but, and you may be holding them for different reason, not just for digital advertising, but would you move away dollar from those old guards of the industry to some of these new ones? Or do you think there's still a space for Facebook and Google in the digital advertising space?
I moved my money out of Facebook years ago, and maybe that was even a little too soon, but it's coming back to look like a good move now. The FTC has got Facebook in its crosshairs, and just the intense pressure on M&A of these tech companies. It's hard to make any acquisitions anymore without regulators just swarming to the pheromones that these big tech companies are giving off right now. I am much more interested in ones that it can be a little more nimble and not so tied to the legacy way of doing things. It's tough to be a tech company right now when you've got your cash cow, your cash flows are coming from something that's getting so much scrutiny and attention. I think it's no surprise that Zuckerberg has renamed the company, is really, really interested in the metaverse right now. But for me personally, there's great moats. I mean, you continue to see the top 5 companies in the S&P continue to get bigger and actually provide the majority of the S&P's returns this last year. I'm a little bit more worried about that going forward the next year, the next 2 or 3 years. I think that if the open internet really does have legs, there's a lot more opportunity for companies that are sitting at a $3 or $5 billion valuation right now.
Yeah, I love it. You're right. Basically, if you're trying to outperform significantly, you want to go there, where things are getting started, not companies who are trying to defend themselves. So they're not defensive; they're actually really aggressively building towards like a better future. I like that approach. That makes a lot of sense. So, is there? I mean, we know every emerging industry, Simon, has a fad or a hype cycle that is going on for it. We've talked about this in previous episodes when we had you on the show. Is there a segment of digital advertising, in your point of view, that is bad or very hyped these days that you would want to stay away from? And I know it's a very difficult question because it's a very emerging market by itself. But have you come across a subsegment of the market that is so hypey and it's just you don't see any value in there?
That's a good question, Hoda. Maybe I answer this. Maybe this isn't the right answer that you're looking for on this one. But one thing that I am critical of in advertising, I put that one kind of in quotes, is you see a lot of Amazon has put a lot of attention in its quarterly results on its advertising segment, right? It is charging the people that are placing products on its platform to get the premier placement, right? It's just like you used to go to Target if you wanted the end cap where everybody was looking at it, you had to pay a premium to place your products there. That is kind of being categorized as advertising within Amazon. I consider that to be more of a tax of Amazon that it's placing on its own clients, especially when you've got other options, the Shopify's of the world, whatever else it might be. I'm a little more critical of advertising like that, where it's still within a platform. It's within Amazon. Amazon's capturing all of that good. It's more of a tax that if you want to play the game and get noticed on our platform, you're going to have to pay us a little bit more money to get that prime placement. It's great that Amazon's able to command that. They've gotten big enough and successful enough that they can do that and flex their muscle. But to me, there are plenty of other options that if you are a retailer or you're creating a widget or whatever else you want to sell on the internet, you're not so tied to necessarily doing that. And I think that there's certainly a ceiling or a cap of how much you're willing to pay before you just say, hey, that's enough. I'm going to go do something else. The ROI still is the most important metric for anyone that's advertising on the internet.
Yeah, I like that perspective because, as I said, like, it's a very difficult question because it's difficult to figure out where the hype is. But we've seen an element of that backlash even to Apple when some of these like app developers tried to question their sort of keeping this close guard against like where and how they place apps into their app store, or how much they charge these apps for the transaction that goes through App Store. So that's sort of when you were explaining Amazon kind of taxing its own partners to place an ad in their environment. It sort of reminded me that everybody, as these companies get so much bigger, smaller companies and people who work with them start having a backlash against so much monetized, like almost nickel and diming every move they're making on these platforms just because they have access to the audience. Obviously, that's super important, but at some point, the audience will move on to other platforms, and then it would be very difficult to charge that sort of tax. That's a really good point. Cool. Well, it's always sad to say that we're coming to the end of the episode. We've been talking almost 30 minutes with you. Maybe as usual, we talk about where can people find 7investing and what's up in the 7investing world, what's happening there, and if you have any update on the 7investing portfolio on the stock card.
Well, first of all, I'm always excited to be on this show with you every month. Thank you, Hoda. Thank you for being a partner with us too at StockCard. One thing that we've started doing just recently is putting our monthly best buy on StockCard. On our page that we have on StockCard, we're putting our 7investing best buy of the team. We're exclusively doing that on StockCard. We're not putting that anywhere else on the internet. It's just I really enjoy this partnership. I want to show you some of the ideas that we have, and the full reports will be available. So if you subscribe to our StockCard page, or you sign up with StockCard and use our 7investing code, you'll get access to that. And I encourage everybody to see what the other advisors on this team are choosing. But our business at 7investing is to go out and find our very best ideas in the stock market. My goodness, we're kids in a candy store right now. There's so many opportunities and bargains. We've got some really, really good ones coming up here on March 1st. We have a very diverse team, whether it's AI, whether it's biotechnology, whether it's financial services. We're uncovering a lot of rocks out there. I'm really proud of our research and our reports. And we come up with 7 stock ideas each and every month. 7investing.com is our website.
Fantastic. Simon, as usual, thanks for doing this. Hopefully people visit 7investing.com or 7investing portfolio on a stock card, which end up in your website as well. There's a link to it. We'll put a link to your website in the show notes. We'll also put a link to the digital advertising report that we did for Stock Guardians, and it's free, available for anyone, in the show notes. And we'll hopefully have you back in the studio soon, next month. Thanks, Simon.
Thanks for having me, Hoda.